Moving on to other stories now, another hike is decided by the U.S. Fed once again by its usual 25 basis points. A decision reportedly made as America's economy is finally picking up a head of steam after several years in the doldrums. Kim Hyesung help us look beyond the digits.
The U.S. Federal Reserve has raised its benchmark interest rate for the second time this year by a quarter percentage point to a range of 1.75% to 2%. It's the seventh hike since 2015. The Fed also dropped its pledge to keep rates low enough to stimulate the economy for some time, reflecting a U.S. economy that's getting stronger.
Economic growth appears to have picked up in the current quarter, largely reflecting a bounce back in household spending. Business investment continues to grow strongly, and the overall outlook for growth remains favorable. Fiscal policy is boosting the economy. Ongoing job gains are raising incomes and confidence.
Quarterly economic projections released at the meeting show Fed officials expect the economy to grow 2.8% this year, up 0.1% from its forecast in March. And a majority of policymakers say they now expect a total of 4 interest rate increases this year after they had been split about whether to raise rates 3 or 4 times. U.S. unemployment fell to 3.8% in May, the lowest since 2000, signaling the Fed is at or near its maximum employment goal. Inflation is also snapping into line, with fresh projections Wednesday indicating it would run above the Fed's 2% target, hitting 2.1% this year and remaining there through 2020. In recent months, emerging economies have been seeing capital outflows and their currencies weaken against the stronger greenback, contributing to currency crisis in countries such as Argentina, Turkey, and Brazil.
The European Central Bank is set to meet Thursday to discuss when to end its bond purchasing program. All this global monetary tightening is increasing volatility in some emerging markets. As for now, South Korea has strong fundamentals like ample foreign reserves to stave off a rapid capital outflow. But with the U.S. set for 2 more rate hikes, whether that continues remains to be seen.
The U.S.-Korea rate gap has now widened from 0.25% in March to 0.5%, and that's putting more pressure on the Bank of Korea to raise interest rates later this year. Kim Hyesung, Arirang News.